Good evening. This is Jack from Charting the Markets, and this is the Bigger Picture webinar for the evening of Wednesday, the 6th of November. My disclaimer, I do this for educational purposes only. I'm here to share my technical analysis with you. I hope you can take some of what I'm doing and learn from it, transfer it to your own charts. I'm not here to issue trading signals. Right. Okay, on ES. Obviously, Trump won. The market really liked that. It moved up heavily today. It made a new high. And we've got a potential level top here, although I'm not taking it particularly seriously. But I am thinking we may well see some retracement. We've got a possible 60-minute sell signal brewing here, a possible little level top. I'm leaning towards seeing some retracement, and we've got quite a lot of 15-minute negative divergence as well. On NQ, we also saw a new high, and we've also got negative divergence. On RTY, we saw a new high with a lot of confidence. We haven't got any negative divergence yet. If this little high gets retested, we'll have it on that too. And on YM, we have made a higher high as well. Possible 60-minute sell signal brewing, weaker one here, but it's nice. DAX and STX really doesn't look like the same market at all, really. We actually made a slightly lower low today on DAX. Not quite sure why that was, but maybe it'll catch up tomorrow. I think for today, in any case, the US markets were looking very solid. This still looks as though it may well be a bull flag on DAX, and very much on ESTX as well. Nice looking support trend line there if that holds. I think this might be turning up, and we might see obviously a significant further move up. Now I have got some targets for that, so I'll come to that on the RTH charts. So let's have a look at those. Right, looking at SPX. SPX on the daily chart. That's the weekly. Sorry, it's right on the daily chart. We gapped back over the daily middle band, and we went straight up to the daily upper band, and we saw almost a move to the 3SD upper band. But I think if we see a little consolidation here, that gives a little time for it to get away before we hit this trend line, which is where I'm looking at. Did we have a high volume day today? Not really by the standards I'd normally be looking at for a significant high, but nonetheless, a fair amount of damage to the upside. But not a spike like this one here, or this one here, or this one here, or this one here. It's a more modest spike, and on obviously very clear news. Now, one thing we do need to remember tomorrow is, of course, it's a good day to see a retracement in the morning, but in the afternoon, of course, the Fed are going to announce what their interest rate reduction is going to be. They may have none, they may have 0.5%, which is what they were talking about a month ago, or the market consensus seems to be that they'll deliver 0.25%, which I think would seem the cautious thing to do, which is probably what they're going to go with. It's also, I think they're probably going to be a little concerned about what's happening on bonds, but we'll be getting to that. So, looking at SPX here, I've got some trendline resistance up here in about the 6,000 area. This is the short-term resistance, and I've got a bigger one up here at about the 6100, 6150 area. But I'm thinking this short one might actually be some decent resistance for now. Certainly, until the 3SD upper band has a bit of time to move, this seems like a good area to be stopping out. We had a weak buy signal fix here, and it made target, of course. All right, looking at the hourly chart, no current negative divergence. We could see some of that develop tomorrow, but I'm mainly thinking that we see a retracement and some consolidation before the Fed decision, and after that, well, we'll see how that goes. We got potential double tops here, but I'm not expecting anything particularly apocalyptic after the Fed decision, and I'd be leaning towards seeing a hit for this trend line. Just showing the shorter term pattern from August on here, and you can see this target is currently at about, I think, the 59.80 to 85 area on SPX, so we shall see. All right, looking at ES, got the same pattern. Resistance up here in about the 60.10 to 60.15 area. No current divergence. All right, let's have a look at the Qs. On the Qs, I don't have a very clear resistance trend line here on the bigger picture. No current divergence, of course. On the hourly chart, no current negative divergence set up, but I am looking at this, the obvious trend line we've actually already hit. Now, it may well move on to another alternative. All it's got to do is break up through there in a sustained manner, and I'll start looking for alternatives. But at the moment, we've actually hit a trend line, and I'm watching to see whether we get any significant resistance there. On the 15-minute chart, we've got a possible RSI 14 sell signal brewing. We've got an RSI 5 sell signal fixed. On the 15-minute chart on SPX, again, we've got an RSI 5 sell signal fix and an RSI 14 sell signal brewing. We were seeing that a lot at the end of the afternoon today, and I'm thinking that may well deliver some retracement. I'll just change that now. All right. So we will see how that goes. All right, let's have a look at the Dow chart. Now on the dia, I've got a trend line here as well, and I'm watching that quite carefully. We've got, this is the blow off the trend line on the hourly chart, where we're looking very overbought, but no current negative divergence. And I've got this trend line at about the 441 to 442 area. So if we reach that, then I'll be watching for potential resistance there. In terms of the daily bands, pretty much exactly the same as we were on SPX and indeed on the Qs. In fact, on the Qs, we actually hit the 3SD upper band, although that's less of a big issue on the Qs than it is on SPX. Nonetheless, if you look back here at times where we've hit it or almost hit it, a couple of days consolidation after this, and came pretty close here, several day consolidation. Came close, hit it here, 4-day consolidation. Obviously, you're seeing a bit of a pattern here. Hit it here, 5-day consolidation, I think. Hit it here, went up another day, and then a 3-day consolidation. But you can see, we often see a consolidation afterwards. It doesn't generally continue straight up, although it does in a very strong trend. This is 1, 2, 3 days on it, and actually it was a week before it started consolidating properly. But nonetheless, it usually indicates that at least some consolidation is close, and often will deliver that immediately. All right, let's have a look at IWM. And on IWM, on the daily chart, we went through the 3SD upper band and went through it with a lot of force. Now, I was saying that in a post a few days ago that there was a big target ahead of retesting this high at 227, and that was the retest of this high here in 2021 at 234.66. We finally retested it today, and that means that we had an actual new all-time high, which is something that has taken 3 years to happen on IWM. So that was a very impressive move. Daily charts, well, the 3SD upper band move is suggesting that we may well see some retracement or consolidation in the near future. And I would note that I've got a pretty decent looking trend line here, which I'll be watching, which I've got in about the 239 area. So we'll see how that goes. Hourly chart, no negative divergence, but obviously eye-wateringly high on the RSI. We almost made 90 on the RSI 14 today, and we got considerably over it on the RSI 5. It is in fact the highest reading on this chart apart from this one here. So on the 15-minute chart, we've got negative divergence again. All this negative divergence is suggesting, and of course the very strong low today, is suggesting that we're due for some retracement or consolidation tomorrow, and my lean is that that's probably what we're going to see. Not a lot to see on DAX here. On Nikkei, I've written off the head and shoulders. That was the bad news option. We haven't seen that bad news. So I'm expecting this to break up, and in due course, I'm expecting to see a retest of this high here at 42.4. Okay, let's have a look at right a second. Right. Okay, let's have a look at the CL chart. Okay, looking at energies, CL, we saw a breakdown from this wedge. This could be continuation higher, but I have to say, one thing that Trump's not going to be good for is energy prices. He's committed to getting as much out as possible, selling as much as possible, trying to keep energy prices as low as possible by keeping supply high. That being the case, I'm still leaning to. I've still got an open target at 63.57. I think there's a pretty good chance we're going to make it. In terms of natural gas, we're still consolidating. I am wondering whether we might see a move to the monthly pivot and the trend line that's crossing that at the moment. But again, on the bigger picture, I'm still wondering about the retest of the low at 1.52. And if we're going to see some downside on oil, that wouldn't be a bad time to see that. Let's have a look at that on the bigger picture chart. So let's have a look at CL. Okay, on CL, no current divergence. We've still, on the W-tick chart, got a triangle that's broken down with a target at 63.57, and we haven't made that target yet. In the absence of a strong move to the upside, I'm leaning towards that target being made. I would say in the short term, we're back over the daily middle band, but as I said, bigger picture, a Trump win isn't actually that good for energy prices staying high. He's much more of the mind to keep it low and to maximize oil production and natural gas production in the US with the aim of delivering that. So we will see. All right, NG, no current divergence. Significant move down we've seen in recent days. Obviously, we had this big move up on the roll. And since then, we've given most of that back. We're still holding over the daily middle band at the moment. If we break below it, then we might still be heading towards this trend line here in the 2.15 area, although this break above did mess up my triangle somewhat. So we will see. All right. Still thinking there is a case for a retest of 1.52, and I'm still wondering whether we might do it anyway. What I would note is in 2 or 3 weeks when we switch over to the December contract, from December to January, we will have another 30 cent roll to the upside, and then that's the last upward roll that we get until, I think, April. All right, great. Let's have a look at the GC chart. Now, GC, we saw a move down here. I had a head and shoulders I was talking about it this morning. That's pretty much made target, which is why I bothered marking it in tonight. So we don't have any positive divergence here. We do have a case for it potentially going lower, and I am watching the possible decent support level and possible head and shoulder neckline in the 26.20 area. Looking at silver, we've gone down. This no longer looks like a bull flag. I'm again watching another level, which is the possible head and shoulder neckline in about the 30.35 area. On HG, we had a beautiful flag there. It broke down and has continued down for the moment. I've drawn in a potential overall resistance trend line, and I'm looking around for potential areas of support, but I wasn't seeing a really obvious option today when I had a look, so we'll see. We do have a possible weak 60-minute buy signal break. All right, let's have a look at metals. Okay, GC. GC, on the daily chart, we've got an RSI 5 sell signal fixed, and that made target today. So that is already sorted out. But although the RSI 5 sell signal made target on the daily chart, we've also got an RSI 14 sell signal that's fixed on the index chart. Now, do we also have that on GC? Yeah, we do. So I haven't marked it in, but we've got that fixed as well. And that is suggesting we may well see lower. How good are these signals? Well, actually, they're very rare on the RSI 14. So I don't actually have any stats on how often these make target. RSI 5s make target a lot, sometimes after higher highs, but actually every single one of the ones I marked on this chart made target. This is the first one on this daily chart. I've seen them before, but not terribly often. So statistically, we don't have an awful lot to go on. But we are below the daily middle band, and we do have potential lower levels here. I've got this possible head and shoulder neckline in the 26.18 area. And I've got a support trend line, which I've got currently in about the 25.85 area. If we hang around for a few days, we can hit them both at the same time. All right, looking at silver, nothing really on SI. We saw a decent move down. Again, we have broken the daily middle band. On the index, I'm wondering about a possible move to 30.34 or on a hard breakdown into the 26.5 area. Currently, though, I've not really got a lot to say that we would see a strong breakdown, but I do have potential higher targets on US dollar, so that is something that could happen. Looking at palladium, back below the daily middle band as well. it looks like we might be seeing a break up. I have to say I had a lot of signals suggesting that the dollar was going to turn here, but a number of those have made target, and then the dollar has broken up. I'm wondering if that might follow through, but we will come to that. On platinum, not an awful lot to say really on a pattern basis. We've broken through the rising support here, keeping an open mind, but we're below the daily middle band again. So there is a somewhat of a lean to the downside, and as I said, the dollar may be breaking up. All right, looking at HG. HG has broken hard below the daily middle band. It had only just broken above it about 3 days ago. So are we looking at it? Is there an obvious pattern to be looking at here? Could this be a bull flag? I think it's actually getting to the stage where it's getting too large for a bull flag. Equally, there's no reason to retest this low because that wouldn't make the second low of a double bottom. So keeping an open mind, but is there potential further downside? Yes, and the move lower that we've seen today has weakened the odds of this being an overall bull flag forming. So we'll see. All right, looking at GDX. GDX got to my trend line that I'd marked in and went through it. It also got to the possible head and shoulder neckline and went through that too. If it goes lower, I've got the next decent support at 36.22. On the hourly chart, we've got a possible RSI 5 buy signal brewing, and we've got another one of those on GDXJ, which hasn't made the trend line target I marked in. I've got that just under the 46 area at the moment. Okay, let's have a look at the DX and ZB charts. ZB first. ZB went significantly lower today, and I've got a lot more to say about this on the daily chart and US dollar as well. We went lower. We didn't reach the trend line I've put here, which would have been considerably lower in about the 114 area, but we have reached a very key level on TNX, which I'll come to. In the short term, we've got a weak 60-minute buy signal, which has fixed. On the dollar, this looks like flag. I drew in a perfect flag channel here, and it broke up and retested the high and then went significantly higher. That is significant as well. We've got a 60-minute sell signal fixed, looking for some retracement here, as we're likely to see on SPX as well, and ES and Q and so on. But I've got more to say about this on the bigger picture, so let's have a look at that now. All right. Looking at the bigger picture, DX, we've got an RSI 14 sell signal fixed, the RSI 5 sell signal made target, and I got to say, looking through the other currencies, we had an RSI 5 buy signal that made target. RSI 14 buy signals fixed, but that's got less of a history of making target, really. I've got a couple here, but they're relatively rare. RSI 5s are strong signals, RSI 14s much less certain. GBP USD, we had an RSI 5 buy signal, it made target. USD JPY, we had an RSI 5 sell signal, that didn't make it possible, then missed target. Came pretty close, but that might be it already. We have broken up from a double bottom here, and we haven't made the target yet. Or at least I believe we haven't. Hang on. Nope, not even close. And at the moment, with dollar breaking up, this is now looking far more likely we're going to make that target. USD CAD, we had an RSI 5 sell signal fixed, and it made target. Australian dollar, we had an RSI 14 and an RSI 5 sell signal fixed, and they both made target. NZ, we had an RSI 14 and RSI 5 sell signal fixed. RSI 5 sell signal made target, then we had an RSI 5 buy signal, that made target, and the RSI 14 sell signal has effectively made target. So most of the diversions we had on the currencies has actually been cleared out in the last few days. That leaves us with a weak RSI 14 sell signal on US dollar here. I haven't updated here, but obviously this sell signal has made the target and returned. What does that mean on the bigger picture? Well, when I was calling the possible rally on DX at the end of September, I was talking about this target here at this trend line. And I did note that we didn't quite reach that trend line. We might well come back for it. And we did come back for it, but then we broke through it. What does this mean? Well, it means we might be heading back towards this 106.38. And if we were to head to the really obvious trend line target here, just as we were heading towards this one, then I've actually got that up in about the 109.5 area. And I'm not saying it's going to go that high. There will be other options. But I'm just throwing it out there as a possibility at this stage. And at the moment, there's not much stopping this from going up further. That trend line was the main resistance here, and really it looked as though we were going to turn at it. But all we did was we didn't hit it. We saw a bit of a pullback, and then we went up through it. Looking for some consolidation here. We're at the daily upper band, but there is a scope to go a lot further. And that's also the case on TNX. Now, TNX, not a lot to say on the hourly chart, but there's an awful lot to say on the daily chart. Now here, we've reached the trend line I've had marked in as the resistance trend line here, and I've been talking about this as possible bull flag resistance. Now, there's something I want to say about this. Now, this rally has been counterintuitive, and I've mentioned it a couple of times, that really with inflation dropping and interest rates dropping, and, interest rates dropped 0.5%, inflation's come down from, what was it when we were here? Maybe 7%. It was high, and so really, the question is, why are we rising here? Now, I was saying from a pattern point of view, we might be heading up into a retest this high at 49.97. But there is another possible reason. When I don't know if any of you follow British politics, but a prime minister called Liz Truss was elected about a year and a half ago, I think, 2 years actually, and she lasted a couple of weeks. And she basically presented her spending plans, which involved borrowing a lot of money. And obviously, like most Western nations, the British are already carrying a lot of debt, and the bond market revolted about it. Yields went up, currency tanked, and she was forced out of office. And the spending plans were amended. That was called that is what used to be called the bond market vigilantes, rejecting a government spending plans. Now, one thing I would note is, the Democrat spending plans were wild. The deficit, everyone's forgotten about the deficit and just thought it doesn't matter in recent years. And as a result, the national debt in the US has been rising and rising. Now, I have to say the Democrats' plans were pretty reckless by my fairly fiscally conservative standards. Trump's are even more so. And if we're going to see a bond market revolt, then I think Trump getting elected probably brought that considerably closer. And it might actually be that we're going to see an early indicator of that by this actually breaking up from this bull flag and making the retest target at 49.97. And actually, we've gone from 36 to basically almost 45. We only need to get up another 5. We're already basically 2/3 of the way there. And if we get there, we get what we've been missing since we made this high, which is a decent topping pattern. Now, that's an opportunity either for this to turn back down and come down properly if the bond market becomes soothed, or potentially to break up. What would be the situation if we were breaking up here? Well, potentially we've been forming a right shoulder. This could be an IHS, but I think really we could just be looking at a continuation of this move up. It's now let's just play a little game here. Okay, just going to play a little game with trend lines. Now let's say we just made a significant low at this 36.03, and I haven't been looking at that, but often on a head and shoulder, inverted head and shoulders, I actually run the trend lines from the right shoulder. So let's run that here. That gives us our support trend line. Do we have a corresponding resistance trend line? Not quite, no. Hang on. Or do we? Nope, we don't. I was wondering if we might have a channel there, because we're pretty close to a channel there, but it doesn't, of course, have to be a channel. What we could be doing is forming from a fairly obvious low, which would be the right shoulder low at the bottom, and forming what would be a pattern of another kind, which would be probably, in this case, a rising wedge that was almost a channel, but not quite. Now, that could come from here. Sorry, I'm just marking this in as I go. And that would put resistance a long way out. But more likely, I think it would be coming from here. So potentially we could be looking, if the bond market gets unhappy about the spending plans, and bond market rebellions used to be a regular thing. We haven't seen them in a long time, but sooner or later they're going to be coming back. And one reason that debts have become so recklessly high is because the bond market vigilantes have basically been out of the picture, really. The last time they were being taken seriously as a threat was before the 2008 crisis. But what power do the bond market vigilantes have? Well, let's see. Currently, I think the American national debt, what is that? Hang on. US national debt. All right, what's that running at? National debt of the United States. All right, hang on 1 second. I think we need a government site. Debt clock. Alrighty, it's currently at 35. It's currently at basically $36 trillion. Okay, what happens if the interest rate goes goes up because there is a bond market revolt? Well, you could have a situation where we see interest rates, and this is what happened to Liz Truss. Short-term interest rates basically went up to 10%, I think, or 9 or 10%. Effectively putting, if that was to happen in the US, then if it gets up there and stays there, that means that the amount of cost of servicing the debt rises by about 5%. Now, that means, now obviously that debt isn't applied all at once. The debt all has fixed periods, but quite a lot of it needs to be rolled over every year. But that means really over a 10-year, 15-year period, the market will start charging that much more. And actually, on all the short-term debt, that will roll over pretty quickly. A lot of that pain will be felt. Now, how much is 5% a year of 35 trillion? Anyone? Well, it's 1.75 trillion. And that's the amount, if that's the penalty that the bond market is charging a possibly unreliable borrower to borrow its debt, well, that's going to cost another 1.75 trillion a year. Where does that money come from? Well, they don't borrow it, that's for sure. The problem is, if you get a bond market rebellion, then at that stage, you have to start seriously thinking about balancing the budget and coming up with a credible long-term plan, which the bond market will think will have the result that it'll get paid back its money. And that's what a bond market rebellion is. That's what sank Liz Truss. And I'm not saying that's going to sink Donald Trump, but I'm just saying the bond market has significant cause for concern here. On Trump's plans, the proportion of debt to GDP in the US would be rising significantly, and I understand it's at about 120 now. If that's the case, the general rule of thumb historically for the level at which you start wondering whether you're going to get your money back, or at least you're starting to think it's becoming unlikely that you're going to get your money back, is about 135% of GDP. That's getting closer, and it's getting closer by the year. And the more reckless the current spending plans are, and they've been reckless for years, then the closer that day will come. So the question is, when is there likely to be a bond market rebellion? And there hasn't been one in the US for a long time. But they happen elsewhere in the world. And the one in Britain, we haven't seen one there for a long time either. But we got one a couple of years ago, and I'm wondering whether we've got one brewing here. In which case, we could see a retest of 49.97, and if they're not reassured about spending plans, then it could continue higher. This could have a huge impact, and you need to be aware of it, because sooner or later, it's going to happen. Could be this year, could be next year, could be 3 years down the line, but sooner or later, it's going to happen, and it's going to be huge. Because heavily indebted governments, when they're looking at a situation where they were going to have to raise taxes a lot just to pay the increasing interest on their debt because the market doesn't trust them anymore, seriously, that is something which will pull almost any government into line. Or if it doesn't, then the cost of servicing their debt rises to a level where they have to default. The American government will not default easily. They will not want to default. It will make plans to avoid it. So we will see. Anyway, we'll see how the Fed goes tomorrow. But that's the underlying picture on bonds here, and that is well worth watching. We are basically at flag resistance now. Do we break up from it? If so, do we break up? I think my feeling is we'll probably see a bit of a pullback here. Then we are going to break up from it. And I think actually we probably are going to see a retest of 49.97. And if we do, and arguably even having got this far, this is actually a minor bond market rebellion that we are seeing right now. Because the markets are likely to become increasingly unhappy with the fact that the market is the government is issuing so much debt and doesn't seem to be worried about. No one's giving any thought to when the budget will be balanced. It's all just on the never never, and sooner or later that only ends one way. So the question is, are we seeing an early sign of that here? And if there is a bond market rebellion and there isn't the right response to it, could we actually see it head up to this 49.97 and then head straight up? Because make no mistake, what you're looking at here is the real long-term interest rate. TNX is the 10-year, but TYX is the 30. But I mean, they're not that far away. TYX is currently at about 4 point. What was it today at the high? 46.66. That was 4.666. TNX, the high today was 4.477. They are pretty close to each other. But if you're looking at long-term interest rates being at 5% or 6% or 7%, that's going to cause an awful lot of pain for the ordinary American, and it's going to cause a lot of trouble in the housing market, and it's going to cause a vast amount of trouble for the government. And it's going to be very interesting to see what that happens. And sooner or later, that's going to happen. So we'll see. All right. So that is bonds. This is something I watch these long-term trends on bonds. And I actually wrote an article about the coming bond crisis about, I think it was in 2013. So this is something I've been very aware of for a long time. And sooner or later, like COVID, I've been expecting all my life. Now, just that there would be a big pandemic at some point and there would be shutdowns and masks and all this sort of stuff. And the reason I was expecting it is because that happens regularly historically. Equally, reckless governments have happened quite a lot historically. And what happens when their debt becomes unsustainable? That has happened quite a lot historically as well. And we will see how it goes here. But I was writing about this 11 years ago, and I'm not saying it's going to happen this year or next year or even the year after, but it's coming. And if it comes this year, well, honestly, I'm a bit surprised it hasn't happened before. All right, let's have a look at the other commodities. So let's see. All right, KC. KC is trying to break up over this declining resistance trend line. This has been pretty apathetic action here, really, but this could be an overall bull flag. We will see. I'm still liking the upside. I'm not wild about the trend line set up here, but we will see. All right, SB. We broke up from a nice looking flag here, and then it's rejected back down into the low. I think a larger flag is forming that may well involve a lower low, and I do have an obvious trend line support in about the 21.25 area. Looking at cocoa, we had a double top. It broke down. It rejected back up into the high, and now the larger double top has broken down again. That's got a target in about the 6400 to 6450 area, and we'll see how it goes. Looking at the CT area, CT chart, possible double bottom here, sustained break up over the 7150 area would have a target in, well, a minimum in about the 73.6 area, I think. So looking at ZW, this has just been trading sideways. I'm mainly watching the soy chart at the moment. Corn had a good day today because one thing I've been looking at is the possibility that we will make a series of large lows and start a new trend higher on grains. Corn, that's going pretty well. Soy, I've been waiting to see if this double bottom would break up, and it hasn't broken up yet, but I'm thinking it might. If we see a sustained break up over the monthly pivot of 118.50, because that's where the double bottom resistance is, then I'd be looking for a move really that would take us up to a minimum of about the 1060 area. Looking at lumber, possible double top setup here. We've got a 60-minute sell signal fixed, not showing any enthusiasm from breaking down so far. If this little smaller double bottom breaks down, then the target would be in about the monthly pivot area, and that would be a nice looking back test target. In terms of the live cattle chart, possible double top that's been trying to break down for days without any enthusiasm at all. The sell signals made target while it's not been going down. Not convinced it is going to go down, but it's very clear where resistance is if it wants to go up. It needs to be back over the monthly pivot at 186.75. Looking at the HG chart, little double top broke down here. Sell signal made target again, may just be resuming the uptrend, and this one held the monthly pivot at the support. Let's have a look at that on the bigger picture charts. KC, no current divergence, but I'm wondering about a breakup over this resistance trend line here, which basically we're touching. This is the main resistance trend line. This could well be an overall bull flag. I don't have a nice looking support trend line here, which has me wondering about lower. But if it breaks up, I would respect that. And I would note that breaking up over this trend line would also be pretty close to breaking up over the daily middle band. This could be heading back into the highs. We tested the high at 275.05. Looking at SB, this still looks like a flag. Not quite as nice as it did before it came back down again, but still looks like a bull flag forming, and I think that's likely what it is. CC, we had a weak RSI 5 sell signal, which was brewing. It fixed, and we're seeing a bit of a reversal. That's not got us significantly below the daily middle band so far, and I'm still wondering if we might see a test of this possible triangle resistance, which I've got in the 7100 area. Looking at wheat, but if this double top actually follows through to the downside, then the one we were looking at on the hourly chart, then I'd have a target down here, 6400-ish, I think. So we'll see. On wheat, still wondering about a move up here. This could be an IHS right shoulder forming, but it's getting a bit extended. If it's going to break up, it really needs to start thinking about doing that soon. CC. Corn I've had in a possible triangle here, and at the moment that's had a firm break up today, and actually it wasn't a bad looking triangle. A, B, C, D, E. Wasn't perfect on the trend lines, but this was a compression and it's broken up. So at the moment, I think that would seem the obvious direction. On soy, we've got an RSI 5 buy signal fixed, a weak one, and the RSI 5 buy signal I was looking at in the last one has now broken up. All we've got to do really to set the ball rolling is to break up from this 1018 and make the target up here in about the 1060s, 1065 area. Do that, and we've got a shot at getting back to 1087, and that could be the second. This could be the second low of a large double bottom. It would be nice to see some action on grains. They've been a bit depressed for quite a while now. Looking at cotton, we've got the RSI 14 buy signal, reached the possible no-miss target and come back down. No current divergence on the RSI 5. What are we looking at here? Well, this could be a short-term double bottom, or we could be coming back in to retest this main low here at 66.26. If we don't find some support here, I'll be leaning towards that second option. We shall see. All right, great. Sorry about the lecture on bonds today, but I think that is something that everyone should be aware of, because if it doesn't happen this year, it's going to be next or the year after. But as night follows day, you can't run a policy like the one that's been run for years under both administrations like this and continue like this without this happening sooner or later. And at this stage, we're within 2 or 3 years. I was looking at it being a decade or two away when I was writing 11 years ago. Now I'm thinking within 5 years maximum, we're going to have some serious unrest in the bond markets. And it could be that's going to start now. All right, great. We'll see how that goes. I'll have this posted ASAP, and I'll catch you guys tomorrow.